Good morning. Good morning. Good morning. It's going to be a good conversation today. Obviously, I always say that, but this can be a really, really good one because we are in the middle of tax season. And for many people that are entrepreneurs, this is a topic or a question that I always get from people. And I want to really dive deep into it, but also share some graphics with you or share some things with you that could potentially help you understand exactly um, this whole thing that I'm about to talk about, right? Which is your tax bill is not based on the sales that you generate, it's based on the profit, right? And when we think about sales, a lot of times, you'll have revenue goals of let's say 500,000, a million, 5 million, whatever it is. And a lot of times that gives people anxiety because in their minds, they're saying, I'm going to have to pay taxes on all this money that's coming in. And I'm here to tell you that's not true, right? Because your tax bill is not based on the amount of money that you're generating, but it's based on the amount of profit that you generate. And when we say profit, what does that mean? We understand sales and we understand revenue generating income, but there's a thing that happens when we spend the money that comes in. And if you spend the money that comes into your business on things for your business that's going to help grow your business, that's going to help push your business forward, the IRS says, you know what? You're going to get a tax deduction. You're going to be able to write that off, which means you're going to be able to offset the amount of money that you're spending on the business to grow it against the money that's coming in, which is your sales. And when you do that math, right, you have your money coming in and your money going out in the business. What is the difference? The difference is your profit. So that's when you hear your accountant say, hey, you have a profitable year last year. And you look at your bank account and you're like, well, I don't see any money in it. That's a whole different topic. But they're talking about you had profit, meaning you had money that you kept based upon how much money that you spent, right? So we're going to talk about that more in detail because once you understand and grasp that, it's going to help you to become a much better tax planner. But the very first thing that you need in place in order to become a more effective with taxes and be able to understand your profit is bookkeeping. If you don't have bookkeeping in place, how in the world can you really understand how much money that you're going to pay? And a lot of times we're thinking, okay, every single dollar that we're spending in our business is a business expense. And that's not always true because there's times where we might take money out of the business to take care of any personal issues that we might have, rent on our apartment or mortgage on our home, daycare for our children. Even though we're not supposed to do that, there's times where we've all done it. And whenever we do that, that doesn't necessarily impact the profit. It impacts the amount of money that you have left to spend in your business to grow your business, but your profit still remains at a certain level because that money that you're taking out is not a business expense. So this is a very, very important topic, and I'm going to share a spreadsheet to go over this more in detail so that you have a visual of this whole thing. Let me pull that up right now. But yes, if you're watching this and it's not live, make sure that you comment replay so that I know that you watched it and I can definitely comment back to you. And if you have any questions, feel free to put that in the comment section as well, because this is definitely something that I think a lot of people can learn from. Okay, so you guys see my screen, right? I put together an income statement. So what is an income statement? An income statement is a statement that shows you at any given moment how much profit you have in your business. So as you can see in this business, this is a made up business. Well, KPMG Spark is the actual company, but the numbers are fabricated. It's made up by myself. So in this example, we have KPMG Spark bookkeeping. At the end of the year, last year, 2024, they made $1,095,023 in their business. So that's the amount of money that they generated in revenue. When we look at the amount of money that they paid their bookkeepers to perform these services, it was $523,139, right? Which leaves you with $571,884. But here's what I'm talking about, right? When I spoke earlier about you have business expenses that you can write off, that you can offset the income. Obviously, we see the bookkeepers is an expense that they paid to offset their income that helped them to generate the money. But then they also had other expenses here, such as their rent, utilities, marketing, car, office expense, travel, insurance, accounting. Even though they're an accounting business, they hired an accountant, human resources, legal, consulting. The owner of the company paid themselves a salary of 120,000. They had wages and salaries to non-bookkeepers. So let's say executive assistants, other administrative people that work within the company that aren't directly doing the work. They paid them a total of $62,820. You have supplies of $10,512, and you have software expense of $3,025.92. So the total operating expenses, right? When we look at all these expenses that I just named out, $408,133.92. So when you combine these total operating expenses with the amount of money that they spent on the bookkeepers, you have a certain amount of money that you spent on expenses. So instead of paying taxes on that $1,095,023, they have a net income of $163,750.08. This right here in yellow is the amount of money that they would be taxed on, not this number up here, the 1,095,000. Do you guys have any questions around that? Let me know in the comments, because I want to make sure that everyone understands this, because this is going to help you become a more effective when it comes to not only tax planning, but understanding how much money do I need to pay at the end of the year. Now, obviously, there's other things that occur, right? If you pay yourself a salary in your business, then that is added to the amount of profit that you're going to pay taxes on. But just from a fundamental standpoint, understanding that the amount of money that I potentially might pay taxes on is not based on the amount of revenue that I generate, but the profit will give you a leg up, because now you can say, okay, now that I understand this, I can make sure that I, let's say, buy some things in the current year that I would have bought in the following year to help me pay a lower tax bill. Now, the flip side of this is, now that you understand this, what normally happens is a lot of people end up saying, I'm going to go out and I'm going to overspend. I'm going to spend a lot of money on all these different things just so that I don't have to pay a tax bill. And that's not necessarily the most effective thing to do, because even when we've worked with people, there's been times where they've done that, and then the following year, they didn't even realize it, but they need to go get a loan, or they need to go get financing or something to help them to grow the business. But now you're going to the bank with financial statements that show a loss or very little profit. And I don't know about you, but if you had someone come to you and say, I want to borrow X amount of dollars from you, and you ask for documentation and you see that they're not generating enough profit in their business, what are you going to say? That's going to make you feel uncomfortable. It's going to make you feel uneasy. And it's going to make you say, you know what? I may not want to give you this money because I don't think that it's going to come back. I don't think that you're going to be in the best position to pay me back this money that I just lended you. Right. So having this information in your head is key to help you to plan better whenever it comes to taxes, but then also understanding where you're trying to go in the next 3 years, in the next 5 years. You might end up saying, you know what, I want to acquire a business in the future, which will require me potentially to go get an SBA loan. And if any of you have been through the SBA process, you understand that the SBA asks for a lot of documents. They ask for your financial statements personally, your financial statements in your business. They want to see, are you liquid? Do you have assets? Do you have profit? Do you have things that can help you to pay them back if they were to give you money? You know, so let me see if there's any questions. I know Chris Page says, do you teach? I mean, I essentially that's what I'm kind of doing right now, right? But yeah, that's the whole point. You know, to really talk about these things more and to give people more of insight on these things, because there's been a lot of people, and if you're one of those people that has said to yourself, man, I don't want to make too much money in my business because I'm going to pay taxes on all this, let me know in the comments. Let me know if this breakdown has helped dispel that, right? Because mentally, if you put this in your head, like, the amount of money that I'm making doesn't necessarily determine how much money that I'm going to pay in taxes, that frees you up. It allows you to say, you know what, I can go into the atmosphere and make as much revenue for my business, grow my business as much as possible, because I'm not really paying taxes on all this. I'm only paying taxes on the profit that is left behind. Another question, Curve Bella said, very good point. I appreciate you. Definitely appreciate you. And there's a lot of people that once you grasp this concept, it's freeing, right? Like I said earlier, because now you can actually plan ahead. You can say, you know what, I have, let's say, a building that I want to move into. And I know that building's going to cost me $5,000 a month. The warehouse is going to cost me $5,000 a month. Over the course of a year, that's $60,000. I have profit of $200,000. You know what? I can take in that expense because I still have money that I'm going to be able to generate and keep in the bank, right? So this is really, really important. If you guys have any questions, let me know, and feel free to, definitely DM me, send me a message. If you're on YouTube, definitely send messages as well. If you're not subscribed to me, make sure you subscribe at Ephraim CPA. Man, I appreciate all of you guys for tuning in, and I will see you guys soon.